Hi and welcome to the Market Alert for Wednesday the 15th of February 2023. So big tech bounces but bonds unloved as CPI breaks hearts of Fed pivot fanboys. Yes, it was a bit high yesterday, we'll look in a moment. US stocks finished mixed after markets digested US CPI data and the plethora of Fed speak that ensued. Obviously trying to, bit of a containment thing going on there. Stocks and bonds diverge on mixed CPI Fed speak. And the numbers for yesterday were, they came out at 6.4, forecast at 6.2, previous 6.5. So, it was near enough what it was previously, so down 0.1%. Allowed the markets to move higher, etc. We'll have a look at that in just a second. But you can't believe any of these numbers, really. UK CPI out first thing this morning. That'll be out before you probably see the market alert, as it's 25 to 7 as I'm recording this. And we've got US news there. We've got some more inflationary retail sales, Empire State Manufacturing Index, and the retail sales month on month. And then Lagarde is out later to speak there about 2 p.m. Just after the US news there. Okay, let's move on. Have a look at the markets to kick off with the Dow, see what it did and how it reacted to yesterday's CPI news. So the Dow, you can see there, big bar for yesterday, trading up to the 78% retracement, managing to break through what we mentioned yesterday, the 34,367, but coming back down and showing some weakness there. To say that if you're to believe the figures, then that rates will continue to rise for the foreseeable future, and that's of course a negative for the market, despite the fact since October they rallied the markets on the prospect of a Fed pivot. 30-minute charts, well, there's your reaction. The market was sent up and then down, and then it tried to move up again when the Dow opened, but then sold off. Got a bit of a bounce, where you can see already heading towards yesterday's low as prices closed below the 200 MA in the 30-minute chart. In the German DAX, showing a bit more weakness than the Dow, which has been unusual for the last few weeks. The DAX been a lot stronger, but you can see overnight already the market moving lower. We've also got some selling coming into the market yesterday, just above the 62% retracement. In the 30-minute chart, everything was going swimmingly till the CPI numbers came out. Market screaming through the R1 and then down, then back for a good 78% retracement, then back over 100% to the DP. We then had a retracement back again before we moved higher with the Dow, but overnight, and as you can see at the moment, prices are below yesterday's low. And in the 5-minute chart, you can see that occurring there at the moment, where we've had some selling there to get through the low. But price is finding support at the S1. So have a look at the news, or the market's reaction to the news in a bit more detail. There you can see there a lot of up and down, couldn't decide, and then eventually moving down, and then all the way back, and then all the way down once the Dow had finished its first hour of trading. There's a pattern with the Dow and also the DAX, whatever it's doing in the first hour or in the first 15 minutes or so, then it will continue in that direction for an hour, and then you'll get a change. And that's exactly what we saw on this news yesterday. And the Dow, first hour of the market moving up, DAX moving up, Dow starts to sell off and they take profits, comes back to where it started. And speaking of profits, so far this week, 51277, profit factor 5.38, and we've got 66 to 33 winners there, or 67 to 33, whatever. It doesn't really matter, like I said before, that's not the important bit for me. It's about the profit factor and average win to losses. That's the most important thing. So yesterday it was the short on the market as it came back, took advantage of it and just held it until the market came back down towards its recent bottom there that it had made prior to its move to the upside. So overnight, like I say, the market just finding a bit of support at the moment. It'll do its best to get back above yesterday's low, that's for sure. These are great areas. It's already oversold as well, so it'll attempt to do whatever it can to move back to the high to keep everything looking fairly normal. In the S&P, similar picture to the Dow. The market still stuck in a sideways range, still hasn't taken out the recent high. And in the 30-minute chart, again, we were moving up nicely. We shot up, we shot down. We then moved back up at the open, sold off, and then late into the evening, we rallied back to yesterday's high for the S&P. The low is down here, out of the way. We've got a BRN in the way and a 200 MA in the 30-minute chart. Say we've got those CPI numbers from the UK out shortly. And in the FTSE, the star performer, 8,000, new all-time high according to ETX's platform. Or whether this is the true all-time high would only be verified with the London Stock Exchange, or now on Eurex out in Germany. But it's an interesting number, to say the least, psychological number, and the market down overnight for the FTSE. So I'm managing just to pump this up yesterday to that high BRN, all-time high, 8,000. Easy to remember now, and then there's all the choppiness with it. They moved it up, and then we've moved down since, and we're just finding support at yesterday's low for this market. In the currencies, GBP, JPY moving up once more. You've got the resistance to the left there as the market struggles slightly. There's the move yesterday, and continuing to move throughout the CPI news as well. Overnight we traded down to the 50 EMA, oversold, and at the DP level. Markets bounced off this up to the 20 bar moving average, which is giving it a bit of grief at the moment and become overbought. Close above here and the high if the market should manage to move to the upside. In the pound, trading up to 62% retracement, coming off this, as you see overnight. Also prices weakening there, still in a bit of a sideways move. Everything was fine till the CPI numbers came out. Then we got the volatility bouncing off the close from the previous day. Looks like the close, yep. And then the market finding resistance overnight and moving lower as well. Down at the low, we've got the 200 MA there as well in the 30-minute chart, which is going to lend some support to the low. There's your low yesterday where the market moved off as well. In the US dollar, this is up overnight, so pressure on the metals. Market in a sideways move. They're trying to break out to the upside by the looks of things. They keep bringing it back, as they did yesterday off the 20 bar moving average, trying to keep the dollar king here, as can be seen by the price chart there. And in the metals, silver down once more, and 200 MA is here. Let me just bring this up a bit. Let's go over to the swing low here to the high. We're looking around the 200 MA in the daily chart as an area of support for silver. Yesterday you can see the market's reaction to the volatility here. Down to the low as well is going to be hit today. Make no bounds about that. They'll do whatever they can to keep this price down and suppressed. And in gold, also moving down slightly there as well. Let's just have a look. You'll notice that the 200 MA is nowhere near in gold as it is in the silver market. So approaching that 89 for gold, and then you've got this low over here where the market had support there. So we'll see if the market can hold at this level. Again, CPI numbers from the UK shortly. There's the reaction in the gold market yesterday. Slammed, rallied, slammed, and overnight slammed as the US dollar moves higher. You can see we're already at yesterday's low and just trading through it there. So there we go. The only other thing is the gold-silver ratio. And again, we see that this is continuing to move to the upside. The silver price under pressure against gold, and that move still intact at the moment. Okay, that's it for this one. I'll get finished, so I'll look at the CPI numbers and see the market's reaction to it. As ever, thanks for watching. See you in the next.